Hello, it's Brian Shannon from AlphaTrends.net. It is Monday, the 19th of January, 2009. I wanted to go ahead and take a look at some stocks for trading this week ahead. I've got some long stocks, some shorts. I've got some low price stocks and some more expensive ones as well. Let's take a look first at the market. Basically, the S&P 500 is pretty much range bound in here. If you look at the SPY from about 82 as far as the downside goes up to about 93 or so on the upside. What's most concerning about this market, though, in the S&P 500 is that it didn't get back above this prior level of support late last week. So this gives the biggest reason for concern for this market. Really, in order to trust the long side, and when I say trust the long side, that is for probably a swing trader's perspective, because when we're in a downtrend like this on the weekly time frame, any rally that you see should not be trusted for more than just a couple days. There can be some good rallies that emerge, but really this market is guilty till proven innocent. It remains a mess. We've got all these moving averages heading lower. But from an intermediate term standpoint, if it can leap back above that 5-day moving average and the $86 level, then perhaps we can see some follow through. Like I pointed out in Friday's video, we do have a higher low in here. This level is going to be important to hold. If that fails to hold, then I think you want to really put your emphasis on the short side of this market. If we get back up, then you want to put more emphasis on some of the long trades that I'll be discussing here very shortly. So here's this bigger picture. We can see this is a 2-hour chart basically of the SPY. Then, of course, we've got the NASDAQ 100, which did break down through support and showed some relative strength in relation to the S&P 500 by getting back above this level here. So we have a higher low in this area, and that 28.5 will continue to be important as well. There is nothing bullish really about this daily time frame. It's more range bound than anything, which means that you have to be prepared to go either way. We're in a trading environment. The weekly time frame, of course, remains in a very horrible downtrend. We've seen lower volume on this rally here since mid-November or so, and we do have the potential that this market can continue straight back down. So if you're going to be trading alongside, do it very carefully. The Russell 2000, same thing, pretty much range bound in here. On the 120-minute time frame, we saw that some support near 44 held. That's going to be a very important level this week going forward. If that breaks, then you want to look for potential support near 42 or so, and then probably a test of the lows, and will be led lower by the weakest group out there, which is the biggest reason for concern, that being obviously the financials. Now, the financials are down, I think it's 24% year to date or so. So, we've got we're extended to the downside. We're getting a lot of bad news in there. There's nothing technically that suggests that it would bounce, but, a lot of times after these big fearful declines, then we do get a bounce rally. But we still haven't tested those lows from mid-November. That's still a possibility. So all in all, what I'm trying to say here is be very careful with these stock ideas. Let's go ahead and start with some long side trades. First up, we'll take a look at APWR. This is A Power Energy Generating Systems. I think that A stands for Advanced Power. Either way, you can see here that the stock recently had a big move higher on some volume. It came back down and tested the conjunction of that 10 and 20-day moving average, and we're also above the 50-day moving average. Now, obviously, the stock's been beaten down pretty hard. You can see that we've got some resistance up in this area here. Taking a look at a 30-minute time frame, I think your worst case stop, if you choose to get involved with this stock, would be right here at about $5.30. Let's look at the 10-minute time frame. Maybe getting above here, we get a little bit of momentum. Ideally, maybe just a little pullback and then a push up through there. Manage risk. If we get, if you get involved in this area, I think your worst case stop goes right about 5:30. If it pulls back and then begins to rally, you want to buy as it starts to rally, similar to where it did here, and then place your stop underneath this higher low. As far as an upside objective goes, I think you could be looking at this stock up near $7 a share or so. So percentage-wise, that's a very, that could potentially be a very nice move. Now, oil is down here right now, I guess about $1 a barrel after the ceasefire from Hamas and Israel. One oil-related stock is this Cameron International. It looks like it's setting up pretty good. We saw some heavier volume on Friday as it came pulled back down on lighter volume in here too towards the 50-day moving average, and this prior level of resistance in here seems to have maybe shaken some people out, recovered back above. So this is one that could potentially go higher. You can see it's back above that 5-day moving average here on the 30-minute time frame. On the 10-minute time frame, this is going to be your worst case stop is this low right here at about 2170. We've seen that this little downtrend emerged. We broke that trend line. We tested it right in here. Now we've got a higher low, and I think basically maybe with a little bit of momentum above this little level here at about 2270. If you're really aggressive, then you could put your stop underneath this low here at about 2230. You want to give it a little bit more room, perhaps down towards that 2170 level as far as potential upside in here goes. Maybe up towards that $25 level, so maybe a 10% move or so. Level 3 communications, LVLT, penny stock here. It's obviously been beaten down severely over the last several years, but it had some huge volume here on the way up. Just recently this year, it's pulled back on diminished volume. Seems to have found a little bit of support. It's still below that 5-day moving average, so I think it probably needs to get. Let's take a look at the 10-minute time frame. Probably needs to clear this level here, and perhaps even above that 126 level. I think your worst case stop is probably down below $1.10. This is obviously a broken company. There's a lot of negative news probably with it, but technically for a trade, I think you could see it back up towards the 165 level. So again, it could make for a real nice percentage move. Worst case stop again below $1.10. If it goes below there and you're still holding it, you're not paying attention. Basically, is the way I see it. Research in Motion has been one of the better tech stocks recently. It pulled back to a rising 10-day moving average, and it's rallying here. Now it's a little bit extended short term, so ideally I'd like to see this stock make another pullback similar to this, consolidate, and then get moving. So maybe it pulls back down towards that 49.5 level and finds, we'd seen this area 49.5. If it can pull back down towards there, and then let's say it this is where it is. Let's say it pulls back to that level. What we want to do is buy it as it emerges from that pullback, set our stop below here, and then we can see where this stock has the potential to go on the upside, which potentially could be up towards 50, even as high as 55, maybe up towards 52 or so. And we're at 51 right now, but if it pulls back to 49.5 first, then goes to 52, then it would be worth considering on the long side. BEAV is the symbol for BE Aerospace. You can see in here that this stock just broke past some resistance earlier this year. That level has also been tested. We've got a 10, 20, and 10-day moving average above the 20. The 20 just crossing up through that 50. We saw volume on the move higher, low volume consolidation. This heavier volume occurred on a little shakeout here. Now to a 30-minute time frame, you can see it's leapt back above the 5-day moving average. So I think this is probably your worst case stop right here at about $8.70. This would constitute a higher low. We have this low, we have this one here, which is a higher low, back above the 5-day moving average, and we can see that with a little bit more clarity here. Now perhaps we get a little bit of momentum, let's say above $9.20 or so. Stick our stop under that 870, 880 level. So about 30 cents of risk as far as our upside potential goes. Here, let's look at this hourly time frame. You can see this, the little shakeout right in there. A lot of times from those failed moves come the fast moves. And on a daily time frame, I think we could probably see it, back up towards that $10.5 to $11 level. So again, it would make for a nice percentage mover. And some of these, none of these stocks, from what I saw, and you want to double check this, are due to report earnings this week. So you could potentially hold them for a swing trade. If doing so, I would suggest trading, a third, maybe a quarter of your normal position size with the overnight exposure. ZGEN, very speculative. Something looks like it's up here. Huge volume, nice little consolidation. It got up to this level that had been prior support, then resistance. So it's holding on very well, though. Maybe above this level here, it gets going. I think worst case stop goes below about 4 and a dime. Also very speculative in perhaps, perhaps Obama's going to mention these stem cell plays. I've mentioned these a couple times on the blog, and they've been good winners. Is GERN. You can see here, on this weekly time frame, we're breaking past this little downtrend in here. We've got the potential really, though, for a move, maybe up towards $6 a share. Obama said that he wants to, give federal funding to stem cell companies. We've still got this little downtrend. I think worst case stop probably right in here, and you probably want to see it maybe get back above 495 or so. Or maybe you buy a little bit speculatively long in here with a stop below that level. Also related in the same group is STEM. This is stem cells. I had mentioned those here and suggested selling them there on the on the election play. They've since broken down. They're consolidating nicely. Just a good stair step higher in here, higher highs and higher lows. Worst case stop down near about $1.40 or so. I think you can tighten that up by looking at a 10-minute time frame and say really maybe a $1.48 is about all as I would be willing to give it. Why give it that extra 8 cents? Percentage-wise, that's a big move lower. It seems as though it's found some recent supply near about $1.63. Again, this is a political perception play that if Obama says something that he wants to repeal the lack of federal funding for these companies, then potentially these stocks could get going. Let's take a look at some potential short plays now. And FSYS. This is called Fuel Systems. You can see here that it's just broken some support recently. It's kind of hanging underneath that level, and I think it's ready to maybe get hit pretty hard. You look at this weekly time frame; it looks vulnerable down towards at least this level once again. So let's take a look here on a 10-minute time frame. I think you want to see it. Let's look at the 5-minute actually. You can see that we had a rally in here. Now, if we could see this stock drop below about $29.70, this low right here, it's at $29.65, let's say, I think you could sell it short below there and then put your stop right up around this area. As it continues lower, hopefully, as it makes a pattern of lower highs and lower lows, you want to, let's say this is our original stop. Let's say it breaks down like this and rallies back up. Maybe you cover a little bit in here. As it begins its next leg lower, you move your stop towards this level on FSYS. This stock, again, looks pretty vulnerable to me. The earnings actually on this one are due February 6th. I'm considering these next 3 plays, this stock and the next 2 plays, as potential put candidates based on earnings being a catalyst. News and surprises tend to follow the direction of the trend, and clearly we're in a bear market and earnings are likely to be pretty weak for most of these companies, including Perrigo, PRGO. You can see we've got a declining 10, 20, and 50-day moving average. We've been rallying up a little bit here on light volume, not very convincing. We've got this prior level of support at about 30.5, and on a weekly time frame, this thing looks like when it, if it gets hit, here, it could get hit real hard. It's got this big area where there's very little stock that traded, so it could fill that hole in pretty quickly. We've got a declining 50, 100, 150, 200-day moving average. This is probably a better put candidate, but you have to remember that some of these stocks that look like they're just hanging on the edge of death can experience these big short squeeze rallies. So it's really important that you move to the sideline quickly. I'm considering that, okay, maybe we had this gap higher on Friday. It seems to have failed. We're back down at the 5-day moving average, and we've got what's looking like a lower high. If we can get kind of similar to what I just said on FSYS, that maybe there's a short below about 29.40 with a stop right up in here. Maybe I would even add to it a little bit below this level if it could break below that, and then I think breaking below 20, maybe below this trend line that you could argue is a bearish flag in here, or bearish little pennant. then that could really be the beginning of the end for Perigo, and we could see a nice quick move down towards about that 22 level. These guys are apparently due to report earnings on February 3rd, and you want to confirm those dates yourself. X-Ray is the symbol for Dentsply. Here's a monthly time frame. This stock has had this huge rally since 2000, and it's obviously under control by the sellers now. It's come down to this first area where we had prior consolidation, looking like it can continue lower again. So on the daily time frame, you can see it's kind of crossing back and forth above and below these moving averages, trying to recover, but it doesn't look very convincing. Here on a 30-minute time frame, we've got lower highs. This looks like your worst case stop right up in near 27.76. On a 10-minute time frame, we could say maybe getting below this level, or you could maybe drill down a little bit further and say maybe below 27. We start a position, put our stop up near about 27.40, add to it below 26.85 in here, and continue to lower your stops. Risk management is always job number one. We've got a very volatile environment. We've got a lot, earnings are due out for most companies this week. All the stocks here that I had mentioned today apparently are not due to report, but again, you want to confirm that. And if they start moving against you once you get into these things, you got to get out very quickly, because otherwise the consequences can be very costly.